Good day, guys. I hope you're good. So today we'll be doing a question from the November 2022 grade 12 NSC paper. So this is the question that we'll be doing, question 1.1, which requires us to calculate the cost of the stock that was damaged. So key information that I want us to pay attention to: number one, the name of the company, which is Lizano Ltd, and then the financial year end, which means the year ended on the 28th of February 2022, which commenced on the 1st of March 2021. So that's the information that I want us to pay attention to. In everything that we'll be doing, we need to pay attention to the fact that we're dealing with this company, and then this company, maybe they've told us they're selling shirts. So we'll find out that they're selling shirts, and also their financial year ended on the 28th of February 2022, which commenced on the 1st of March 2021. So we've been asked to calculate the cost of the stock that was damaged for 5 marks. So this is the information that has been given to us. We've been given information B, Roman figure 1, which has the following details: the business sells sports shirts. The weighted average method is used to value the shirts. So they are selling shirts, and then the WAM is used to value shirts. So you need to know how to use WAM. So you need to know the formula for WAM. And the following information was extracted from the records, and then we've been given units, unit price, and then the total. And then on the note there, they said damaged shirts were not included in the closing figure, meaning that the closing figure given there does not include the damaged stock. So meaning that we need to use a particular formula or a particular method to calculate the damaged shirts. Then they said the damaged shirts must be written off as a loss, meaning that after that we need to write them off as a loss, but we can't just write them off without knowing the cost of the stock that was damaged. So how do you calculate the cost of stock that was damaged? This is what we need to do. So remember that to calculate stock, or to deal with stock, we will have your opening, we'll have your purchase, we'll have your closing, or else you'll have the unit that has been sold, and then which will give you your closing. That's the formula for calculating your closing. So first of all, we need to calculate your closing. So we have two closings here. We have the one that has been given to us, which is 1,185, and the one that we're going to calculate. Why are we calculating the closing? We're calculating the closing using our own way, or the way that we know that is used to calculate the closing, so that we can compare it with the one that has been given to us, because they said damaged shares were not included in the closing figure, meaning that we need to calculate our own figure, compare it with the figure given. So how are we going to calculate it? We're going to say opening, which is 1,900 units, plus purchases of 7,100, which will give us an amount or total units of 9,000. This is your total available units for sale. And then because we sold units amounting to 7,750, we're expecting to when we say 9,000 available units less the ones that were sold, so less 7,750, we need to get the closing. So let's put it on the calculator and calculate the value of the units. So as I've said, we had 1,900 plus 7,100 less 7,750 units sold, and then we'll get how much? We'll get 1,250 units. So in this case, we're not given 1,250 units, but we were given 1,185 units down there on the closing balance. We've been given that one. So if we say 1,185, we less it from the 1,250. Say 1,185 less this amount, will get 65 units or 65 shirts. So these 65 shirts, this is the number of shirts that were damaged. Why are we sure, or how can we confirm that one? They said the damaged shirts were not included in the closing stock figure, meaning that the given closing stock figure does not include the damaged shirts. It does not include it. So that's why we're following our own formula, and then we compare it with the ones, the units that have been given to us. So now we have the units. So after having the units, we need to calculate the weighted average price. The weighted average price, because we're using WAM. Because we're using WAM, we're gonna say our opening balance in the monetary value, which will be the one on 1 March 2021, the monetary one. 1,254,000 from that table, plus the ones that were purchased during the year, which is 5,325,000, less sorry, we're not going to less anything, so it will give us the total available for sale, which is 6,579,000, 6,579,000. So in this case, we do not have carriage, so we did not have any return. So we'll leave it at the total available for sale. So our total available for sale will be 6,579,000 as given from the table, and then we divide that one with the 9,000. Remember, the 9,000 is calculated from adding 1,900 and 7,100, which will give us the 9,000. So we say 6,579,000. Let's go to our calculator. If we go to our calculator, it's gonna be 6,579,123 divided by 9,000 units. So get 731, which is the weighted average price. The weighted average price is 71. So if you say 71 multiplied by 65, that's our value or the cost of damaged stock. The cost of damaged stock. So that's how we supposed to calculate this one. So let's put it in writing. Let's quickly put it in writing. Remember, I said the first thing that we need to do, we need to establish that we've been given what we've been given the closing value or the closing units. Closing stock is equal to how much? The given one. So let me say given, okay, I think I was not projecting, okay, sorry, given unit or closing stock is equal to how much? 1,185 units or shares. And then after that, we will have what? We will now calculate our closing stock. So formula for calculating closing stock will be what? Closing stock will be equal to what? Opening. So we're going to just say open plus purchases less sold. So in this case, we're going to say our closing, which is equal to, maybe will be X. X is equal to opening. Our opening will be what? Our opening will be, sorry about that. Our opening will be how many units? The opening will be 1,900. 1,900 plus 7,100 less 7,750, which is equal to how much? Our X now will be how much? Our X will be equal to 1,250. So this is our X. So we compare X versus the one that has been given. So the difference between the two, we're going to just say 1,250, the one that was calculated, less the one that was given to us. Then the difference of the two will be the cost of the damage, also the units of the damaged shirts. And after that, we need to use WEM to do what? We need to use WEM to calculate the weighted average rate. So we're going to do it like this. We're going to take the opening balance, or the opening balance in terms of the monetary value, which is 1,254,000. Let me just summarize it. It's going to be 1,254,000 from that table, and then plus 5,225,000, which will give us 6,579,123 divided by how much? Divided by the 9,000 that we calculated. And then this one will give us how much? Will give us 731, which is the unit, the weighted average. So the weighted average price, the weighted average price. So if we say weighted average price of 731 multiplied by the 65 units, we'll get how much? We'll get 47,515. This is the cost of the stock that was damaged. Therefore, you can just say cost of stock that was damaged. So we've answered the question. Thank you very much, guys.